and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day's trade, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views to find out where exactly should you be deploying your funds at record high markets and where can money still be made. So stay tuned for all of that. First up, a quick check on how the benchmark indices are moving as we inch towards the second half of the trading session. Well, after touching record high levels in the first half, mild profit booking is what you can see on both the Sensex and the Nifty right now. From those record highs, you're seeing a flattish to a negative bias right now on the Nifty. It's hovering around 20,060 odd levels, just about 8-9 points down in trade. The Sensex, on the other hand, is down about 80 odd points at 67,394. But if you see from the day's peak and the record highs, they've actually slipped quite a bit. Around 67,770 kind of record high levels is what we had already seen in the day's high. Let's talk about the broader markets as well, the mid and the small caps, and then the other sectoral indices to see what the action is building up below the surface as well. A mixed trade when we see the mid and the small caps. So mid caps are up by about 0.7% higher in trade, 40,525. So that's where the build-up is continuing. The small caps, in fact, doing even better, over 1% of increase coming in. Just at 1 days of a fall of 3.5-4% odd. But last 2 days have again been full of surge for the broader markets right here. Again, sectorally speaking, it's the metals pack that is shining the brightest today. The Nifty Metal Index is up by about 1% in trade today, followed by the small cap 100 index. So you can see 1.5% up surge coming in on the Nifty metal stocks. The realty stocks also higher in trade right now. Oil and gas and the auto and the IT pack are also inching up. But you are increasingly seeing some sectors coming under pressure, like healthcare is now down in trade. The Nifty Bank, private banks, they are coming under slight pressure. And also when we talk about the FMCG and financial services. So it's a mixed trend when we talk about the sectoral action. On the Nifty 50 again, you do have the Adani Group stocks under pressure today, but some of the stocks from the healthcare and the banking space, auto space, these are the ones that are inching up. And of course, like I pointed out, all the top gainers would also have names from the metals pack as well. So you can see Hindalco as the top gainer, about 4% increase for this one. UPL, Tata Steel, these are the other gainers at this point in time. You also have ONGC, Tech Mahindra, Eicher Motors, the other stocks that are up into the green and giving support to the overall Nifty market, Nifty index. Now on the downside, however, you have Asian Paints that's dragging. Adani Ports, like I said, Adani Group stocks are slightly down in trade. ITC is down in trade by about 0.7% odd. So these are some of the stocks that are doing seeing some profits being taken off. Coal India, for example, Sun Pharma, HDFC Life, they've had a good run up in the recent past as well. But time to welcome our guest on the show. Siddharth Khemka joins in, Head of Retail Research at Motilal Oswal Financial Services. Good afternoon, Siddharth, and thank you so much for taking the time out for this discussion. First up, your quick take on the markets overall. There's such a dichotomy in the markets, as to where are we really headed. Of course, a whole host of both triggers and headwinds that await us going forward. We've just seen that record high. People were believing that perhaps now is the time that the markets would correct a little bit and then consolidate to protect this level. The large caps and the large caps being a brighter spot for most of the analysts. The broader markets, which have had a wild swing. So, what is your take currently on the markets, and what would you advise investors to do?
Yeah, very good afternoon, Sakshi, and good afternoon to all the viewers. Thanks for inviting me to your show. So I guess if you look at the market, we were earlier seeing a lot of sector rotation happening. But now what has also started happening is because of the sharp, as you rightly highlighted, the dichotomy between the market segments. So large caps were kind of underperforming the mid and small caps. And mid and small cap, we saw a strong rally from the lows. But also if you look at from the 1st of April, in the last 5-6 months, they have seen a sharp outperformance, and now the valuations at for the mid cap is at about 15-20% premium to the large cap index. This is where a lot of experts have started kind of putting in a word of caution that the risk reward for fresh entry into mid caps is not very attractive, and hence it warrants some caution for investors who are looking to enter now. If you look at the macro setup for India, consistently data after data points to a strong macro environment, be it the GDP data, which is a 4 quarter high, the IIP data, which again kind of showed a strong strength. Inflation is kind of inching down, GST collections, income tax collections, so all point to a very stable macro environment. If you look at
Okay.
the micros, the Q1 results were very strong. The Nifty 50 Q1 earnings grew at 32%. The asking or the expectation for the full year is about 18-20%. So net, I would say that the Indian markets are pretty strong in the overall setup. I would expect now more and more momentum shifting from the mid caps to large caps, and hence expecting a stronger move or participation from large caps from here on. Mid caps would also participate, but may not be in the same pace at which they were moving up in the last few months.
Okay. Let's talk about a few buzzing sectors and stocks, and then we can come to your themes and specific stocks that you'd like to recommend to all your viewers. First up, it's the sugar stocks that are in the sweet spot today. Most of the stocks have run up. In fact, there are some stocks that are up by even 16, 17 odd percent on an intraday basis. Dalmia Bharat, Dhampur Sugar, Awadh, Balrampur Chini, Rana Sugar, Sri Renuka Sugars, all of them up by over 8 to 12, 13 odd percent. Like I said, Magad Sugar, this is the stock that's up 16, 17 odd percent right now. EID Perry, you name it. All of the sugar stocks are up into the green right now. Of course, there is news flow saying that there is a likelihood of a 14% fall in sugar output in Maharashtra for FY24 as the crop year. The building up of the El Nino conditions, and thereafter DAM Capital has initiated coverage at this point in time on the sugar stocks, believing that these stocks could also have a potential of up to 28%. I want to take your view on the sugar space as a whole, and what would you advise an investor who may be looking at this space interestingly right now?
So actually, if you look at the sugar sector, it is definitely a commodity space. Plus, there is a lot of regulation around this commodity being an agri commodity, and it's a sensitive topic for elections, especially in the high sugar producing say states of Maharashtra, Karnataka, UP. What is happening is that globally, because of the El Nino effect, Brazil, which is another large sugar producer globally, has seen less rainfall, and the same we witnessed in the month of August in India as well. So together, these two countries combined, the production output for sugar has come down for this year, and that has led to the sugar prices moving up globally at an 11-year high, and in domestic market it is at a 6-year high, which is kind of creating some positivity for the sugar mills, where the because of the domestic sugar prices are firm and their realization would be much better. The second and the big impact that we are seeing, and the buzz that is being created in the sugar space, is because of the global biofuel alliance that India initiated in the G20 summit, which kind of takes the ethanol blending for target to 20%, not only for India but for all the other member countries which are participating in the biofuel agreement, and that will be led by India. So a lot of these companies which are in sugar, we are seeing that already from the domestic market, because of the high crude oil prices, the demand for ethanol blending has already gone up. We are currently about 5 to 6% blending currently, which if goes up to 10, 15, and 20% over the next few years, will be a huge demand and a structural positive. From a commodity company, they would become a structurally long-term growth stories, and that is why there is so much of demand. Valuations are comfortable. Apart from sugar companies, you should also have a look at Praj, which is a capital goods, or you can say the main provider of machines and engines, which would convert or make these ethanol. So that company also benefits. I think a lot of these sugar companies like Balrampur Chini, Dhampur Sugar, they are the larger ones and best suited to ride this cycle and the new wave of the ethanol demand coming out of the global biofuel agreement.
Okay, understood that. Do you also believe that the upcoming festive season could further lead to a soar in demand? And just like a wild question right there, do you think sugar has in itself as a sector to turn the next defense or the next railways, the kind of rally that we have seen in railways and defense stocks? Do you think the sugar space has in itself some that kind of a potential?
So, Sakshi, as I said, it is an agri commodity. A lot depends on the monsoon for the production. You don't have a control on it. Plus, you have a lot of these policy kind of interventions, which again can kind of bring in some disruptions in the long-term growth story. Having said that, the biofuel agreement can convert or transform this sector from a pure domestic to a globally exports oriented sector and lead to that kind of growth engine. But as I said, the productions is limited because it's an agri commodity. I would say that it would I would still take some more time before these the contours of the deals are very clear and the capacities are in place. Then I think they do have the potential, but these are the concerns that one definitely need to keep in mind.
Sure, understood that. Moving on from the sugar space, Siddharth, according to you, in the current setup, despite the run up that we've already seen on the Nifty and, of course, on the mid and the small caps that had been continuously hitting record high levels, several pockets, we're discussing whether froth is developing, whether it is overheated or not. But do you still see, some pockets having an attractive value that now can have, can be on top of the radar of investors?
Definitely, Sakshi. I think a lot of sectors, especially if you talk about mid caps, it's not a broad based rally. There are a lot of pockets where valuations are still comfortable. Companies are showing potential to growth. Continuing with your upcoming festive theme, if you look at what has happened to some of the retail stocks, they have kind of not participated in the rally because of the slower demand. But we expect that with this festive season, the demand would revive. One stock that we recently started covering or we initiated coverage on was Raymond's Limited. The
Okay.
company has strengthened its leadership in the last 2 years, restructured the group, and clear focus on two business segments: A, the retail business, and B, the real estate business. They have hived off the FMCG business, and valuations are still comfortable. If you look at purely from a retail business, it is trading at 15 times FY25 P compared to the other retail stocks which are trading at 45, 50 times. So a very sharp discount to others. With the management focus and capital infusion, I think the stock can do well in the upcoming festive season.
Okay, understood that. So Raymond is one of the top picks. It can definitely do well in the upcoming festive season. Valuation's comfortable, and you've initiated coverage on the stock as well. All right, so that's as far as the textile stock is concerned. Apart from this, which is the other segment that you'd be bullish on? Of course, we've discussed enough and more about the PSU space, the PSU banks. Financials are again emerging one of the clear consensus because they have not really performed in the kind of rally that we've seen so far. Do you think financials is something that investors should now focus on, and which segment of financials would actually give them better value now?
Definitely, Sakshi. I think financials, more so if you look at the larger banks, they have not participated. And going forward, as we are expecting Nifty to now start outperforming, a big contribution has to come from banks. And if you look at the banks, two banks we like very clearly. One is HDFC Bank. We believe that the merger overhang is now done with. The company is delivering and has a very exemplary track record over the past 2 decades. With the merged entity, we believe that the market share will expand. The synergies will kind of offer opportunities to cross sell with expansion in the distribution. The loan book growth will improve about 17% is what we are expecting over the next few years. And with the mortgage mix rising to about 33%, we expect ROEs to also improve. So HDFC Bank is the first bank that we like. Axis is another one in the private space where the bank is focusing on strengthening its retail franchisee. It has consciously pawned its bulk deposits. Overall, in FY23, the bank posted 21% growth in CASA deposits, which was much higher than its peers. So asset quality has also improved, and the ROAs are further aided by the steady loan book growth and moderation in the OPEX ratio. So we expect ROAs to improve to 1.8%, ROEs to improve to about 16% by FY25. So that is the other bank that we like in the current market.
Okay, understood that. Well, many thanks, Siddharth, for being with us on the show and discussing such wonderful insights with all our viewers on several sectors, themes, and specific stocks where you believe investors can still look for an upside and create great value for their own portfolios too. Many thanks. Always a pleasure having you with us on Business Today TV. Markets right now flattish with Nifty inching higher back again. So slight volatility being seen on the weekly expiry day, and you can see an 8-point surge on the Nifty, whereas a 14-point dip on the Sensex as well at this point in time. Very, very flat as far as the benchmark indices are concerned. We'll continue to track the market movement for you, and you can do the same by being with us on Business Today TV. So don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn, and Instagram. Until then, thanks for tuning in.
You're one of the very few people who have not only known but lived with two of the biggest icons